Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. It is Wednesday, February 12th. I have been out for a couple days. I apologize. I have been really sick. Actually, I had a bit of a stomach bug. Hopefully none of you out there have it. And for those of you who have, man, you probably know exactly what I'm talking about. I had to take a couple of days off of work, but I am back at it. Unfortunately, I've passed it on to my wife, so I'm hoping that it doesn't head over to my daughter's next and run through the house like it usually does whenever we get a sickness here at the house. But I can't recall who it was, a viewer of the channel, a subscriber of the channel, I think, asked about Dow Chemical here a couple weeks back or a week back or so. So I wanted to take a look at that one. So this is out of the material sector. We're going to take a look at Dow Chemical here. Before we get too far in the video, though, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell down there below so you're notified whenever I put out any new content. Typically, I do this stock pick of the day series Monday through Thursday whenever the market's open. Again, I have been very sick the last couple of days, just finally getting back to it, so I don't typically miss a whole lot. Sometimes whenever I'm on vacation, and obviously whenever I get sick, I won't be here. But for the most part, I'm here Monday through Thursday whenever the market's open. We take a look at a company stock that's pulled back on the day, run it through the screener, see if it is going to make it onto my watch list. And just because it makes it on my watch list does not mean I'm investing. It means I am interested in doing more of a deep dive. It is just an initial screener. You can tweak the screener however you'd like. We'll see that here in a second. And for those of you who would like to buy me a cup of tea, there's a thanks button down below as well. This is the Vested Interest Stock Screener. This is the criteria we will be running through in the video. You can pause this here. It must meet 5 of 8 since it's not a financial company. If it was a financial company, we add in price to book with 1 as fair value. Don't blindly use 1 as fair value for companies outside the financial sector. That's for banks, insurance companies, stuff like that. For a company outside the financial sector, you can use price to book for any company. Just make sure you're comparing it to itself over time as well as to other companies in the same sector, in the same business. All right, back to Dow. Check them out, www.dow.com. This is a originally Michigan-based company, and I love my Michigan-based companies. For those of you who are not aware, I am from Michigan. It's where I grew up. I was actually born in Wisconsin, but most of my life was spent here. Some time in Texas as well, and a couple other states across the country, Utah, Georgia, whenever I was in the service, California for a little while. So I've been around a little bit, but Michigan is where I call home now. I am back home, grew up in the thumb here. And this Dow company is a Michigan-based business, although I think they have a lot of other places around the world that they are as well. But this is where they got started. Dow's legacy reflects a commitment to look forward and do things better. We continue to focus on solving the toughest challenges of today and tomorrow, driven by our ambition to become the world's most innovative, customer-centric, inclusive, and sustainable materials science company. And that's really their focus. I mean, they are a materials company, really almost like a materials company. Our history reminds us that we have the ability to change in the world through collaborative partnerships, science, and technology. Learn more about the history of Dow. They have their hands in a lot of industries. Now you can see some of their products here: adhesives and modifiers, adhesives and sealants, amines, chelates, conductive materials, so electronics, elastomers and plastomers, foam control agents, so fire suppression, gels, encapsulations, and conformal coatings, lubricants, heat transfer, and desiphoning fluids, optical materials, performance monomers, plastic additives, polyethylene, polyurethanes, release coating systems and agents, resins, binders, and film foamers, silicones, organic hybrids and salines, solvents and glycols, specialty polymers and compounds, surfactants, emulsifiers, and polyglycols. So again, they have their hands in a lot of different industries, whether it's construction industry, automotive industry, businesses, electronics, you name it. There probably is a product that they provide out there in the workplace for different businesses that you may not even realize that Dow provides. Now we are talking about Dow, and the reason we are talking about them, down 0.97% on the day, ticker DOW, again out of the materials sector here, closed out the day at $38.26. 52-week low as $36.66, as high as $60.69. So they are closer to their 52-week low than their 52-week high, and they are within 15% of their 52-week low. Market cap of $26.925 billion. I believe they did a stock split here where they split up the company a little bit here a while back. I'd have to go back and look at that and see what exactly that was, but correct me if I'm wrong. I believe they did a stock split and split this one up a little bit here a while back. A beta of 1.22, so they are more volatile than the overall market. PE seems a little elevated at $24.37 per share. EPS at $1.57 per share. Their earnings date is coming up April 24th here. Forward dividend is $2.80. They are a quarterly payer. Their yield, is very high at 6.82%. Ex-dividend date was November 29th. Looks like they paid out that dividend December 13th. So if you were to buy them now, you would be in line for the next dividend, though you're going to have to wait a few months to get it. One-year target estimate, at least according to Yahoo Finance, where I pulled this information from, not affiliated with Yahoo Finance, just one of the sources I go to for information. $46 per share is their estimate, so they do see some upside as far as price appreciation on this one. Jumping over to dividend yield theory, I like to look at this one and see if it is presenting any undervaluation. To do that, we look at their 5-year dividend yield average, 5.39%. Compare it to their current 6.82%, or over here where it says forward, 6.82%, same number. And since it is higher than their 5-year average, that speaks to undervaluation, only according to dividend yield theory, right? Now, their payout ratio is elevated, 186.67%. I don't like that. I like under 75% here, so that is very elevated. That would be a bit of a concern for me. Jumping down here, I want growing free cash flow over time. Typically, if a company has growing free cash flow, they can do a lot of things with that free cash flow. They can pay down debt, make acquisitions, reinvest back into the company, buy back shares, pay a dividend, and raise that dividend over time, unless their payout ratio is 186.67%. So going back here to December 2021, $4.6 billion in free cash flow. December 2022, that's up to $5.4 billion in free cash flow. 2023 is where we see the drop to 2.7, and a further drop in 2024 down to negative 151 million here. So we don't like that trajectory here from 2022 on. Repurchase of shares, they are repurchasing shares. Pulled out $1 billion in 2021. 2.3 billion in 2022, 625 million in 2023. Looks like they're continuing that in 2024, 494 million. So they have started to decrease that. So along with their decreasing free cash flow, they are still repurchasing shares, but they're decreasing that as well. Now, jumping over to stockanalysis.com, this is another source I go to for information. I am not affiliated with Stock Analysis or Yahoo Finance, just two sources I go to, and I do recommend more than one source so you can make sure the information you are getting is accurate and up to date. Now, they have 14 analysts that have taken a look at this. They call it a consensus hold. Low estimate of $38. Currently sits pretty close to their lowest estimate, but if it went down to their lowest estimate, that would be a 0.68% decrease from where it currently sits. Average estimate of $48.29 is pretty close to what we saw with Yahoo Finance on the previous page. That would represent a 26.22% increase, and a high estimate of $56 would represent a 46.37% increase. All the while, you could collect that almost 7% dividend yield if they were to maintain that. Again, very elevated dividend payout. We'll see that here as we continue through the video. I like to jump into statistics, look at return on invested capital and return on equity to see how well the company is reinvesting capital back into itself. I like 10% or better for these metrics. Return on equity is a little low at 6.5%. Return on invested capital even lower at 3.95%. Neither one beats the 10% metric I'm looking for there. But their EPS growth of 40.43% is smoking high. I like 5% or better projected over the next 5 years, so that definitely meets the metric and beats the metric there. Revenue growth forecasted at 4.28% is nice to see as well. Now, looking at their dividend history, they are a quarterly payer. Again, very elevated payout ratio, 178.5%. They are not growing the dividend, which with such a high payout ratio, I can understand why. Buyback yield is positive at 0.55%, so whenever they are buying back shares, they're doing it efficiently. Shareholder yield is positive at 7.82%. We want to see that. They do pay out on the March, June, September, December timeframe like most companies do. And as you can see here, at least going back to 2022, they've been paying 70 cents. And that's where it's been maintained for the last couple years, several years anyway. All right, let's run them through the screener, understand the business, right? This is a material company. They are providing a lot of different materials for a lot of different products and companies out there in a lot of different sectors. Like I said, construction, automotive, healthcare, electronics. I mean, you name it, they're providing some sort of materials for all of these different industries, and you may not even be aware you're using a Dow product. Growing free cash flow, nope. They've had a few years of decreasing free cash flow. We want them to turn that around. Growing dividend, no, they have paused that for at least the last several years. Dividend payout ratio is well above 75%. They're well over 100%. That is a big red flag. You want to watch that. Check valuation based on dividend yield theory. Dividend yield theory says they're actually potentially undervalued currently. It is within 50% of a 52-week low, so check there. Return on invested capital, neither one of these, return on equity or return on invested capital, is over 10%, so no check there. But earnings per share growth over 40%, so we get a check there. So it is 4 of 8, not quite where I would want it to put it on my watch list. That doesn't necessarily mean you shouldn't take a look at it. It is just not quite there yet for me. If they were to turn around the return on invested capital, return on equity, that would be great. Get their payout ratio in line, or start growing that free cash flow again. I don't know that they should be growing their dividend with the payout ratio so elevated, but growing that free cash flow again, or the dividend payout ratio dropping back in line, would put it right on there. But 4 of 8, not quite there yet for me. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or like this one, suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, drop in the comment section down below, and I'll work it into the rotation on a day it pulls back. We'll see what it looks like and run it through the screener. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and hope you don't get the stomach bug that I had. Man, it was a rough one. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion in investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of counsel of a certified financial advisor.